Well, my next guest is a stock picker who beat 99% of his peers from 1997 to 2009 when he managed the FBR Focus Fund. Now he is managing money at his own firm and is beating the markets yet again. He's Charles Akre of Akre Capital. Thanks so much, Chuck, for being with us. And you know, in this macroeconomic environment that's moving the stock markets, how do you pick stocks now?
Well, we pick them the same way we always have, which is one at a time. And we have a set of criteria we use that helps us identify business that we describe as compounding machines. And we're looking for businesses where we have an opportunity to compound our capital on a per-share basis over a long period of time.
But Chuck, are you telling me that you haven't changed any way in the way that you've picked stocks because of what's happened?
That's actually not true. We've said
so
we've been pretty clear. Well, we've been pretty clear about this, that as a result of 2008, we're trying to, as I describe it, trying to include my worldview into my stock picking activities. And because in 2008, we had a result that was unpleasant, as did most everybody, and we would just like to not repeat that. So we're trying to have a better inclusion of our worldview into our stock picking. Doesn't make us macro investors at all. We're still picking them one at a time, but we're trying to just have a better use of that information in our stock picking.
Then where are you deploying your cash then?
Well, you know, again, we do it one at a time, and you may know we're about 22% cash right now, and that is the lowest level of cash we've had since we started the fund in September of 2009. And the reason it's at that level is we just have continued to believe it's time to be cautious, and periodically the market gives us an opportunity to put more of that money to work, even as money's coming in every day.
Okay.
And
okay, but I want to point out, I mean, as I'm looking through my notes, low-end retailers are on your radar. TJ Maxx, Ross Stores, Dollar Tree. So in some ways, your macro view of the consumer recovery is leading you into these stocks.
There's no question about it. Those three off-price retailers are you know, an important part of our portfolio, and we get there partially because of our macro view. And our macro view is that in the United States, the consumer is constrained by employment issues, constrained by access to capital issues, constrained by a need to pay down debt and save, constrained by the prospect of higher taxes. And so it is our view that since our economy is still 70% driven by the consumer, it's our view that this decade cannot look like the last one in terms of its robust consumer spending. And having said that, I mean, you know, we're a very resilient country, and the psyche of the American people is a very important deal. And we've been in a tough period for a long time. So we're seeing bright spots of pickup in retail sales. But we think those three businesses, which had a terrific experience in good time, are particularly well suited for times where everybody's trying to stretch a dollar.